client activity, especially in those businesses that are most closely tied to trade finance activity, to household spending and the like, in our corporate bank and private bank, we do see momentum there that we expect to carry through to the second half of the year. And that's very encouraging. The reticence is really around financial market conditions because obviously those conditions have been very strong. We do see, if you like, a plateauing that's taken place a little bit in the last few weeks, and a reduction in volatility that's taken place. So one can't predict the future perfectly, but sometimes the performance in financial markets and the economic growth can result in different conditions for our businesses.
What do you think would be the major risk to financial markets? I mean, people obviously are waiting for a market correction given the high levels of the markets. What's the main risk you have in mind?
Well, look, I think there's several risks. One is the impact of reflation or the question of will we enter an inflationary period. There remain risks around obviously geopolitical events. There are risks around the ongoing sort of path of the pandemic. And so looking at those risks, one obviously needs to be mindful in managing through that for us and obviously our clients as well. Equally, on the other side of the ledger, you have extremely strong fiscal and monetary support for the economies and for the financial markets. And so we're sort of observing the push-pull in that. And that's really defining, I think, the market environment at the moment.
Talking about the dividend, because I've seen that you have taken some, I think, 300 million for the first quarter in an accounting perspective for paying dividends for the year. Do you think you can continue doing that during the course of this year so we have a certain level we can look at? Absolutely.
Look, to begin with, the dividend accrual is actually mechanical and reflects a rule that the ECB has promulgated. And so while it's very encouraging, one doesn't want to read everything into our distribution decisions, which will be later this year in respect of profits for this year. But we're very encouraged at the level of 300 million of accrual for common distributions. It gives us a very good start on the year, and we would expect to continue at that rate of accrual from earnings in the balance of the year. For us, the most important thing is we'd as part of our strategic plans, we'd committed to shareholders to return 5 billion over several years, and the first quarter represents a really good first installment on that.
Do you think your share can also sort of take off when there's real credibility that you will pay dividends?
Well, we think it's certainly part of the equation, and for the management, ever since our July 19 sort of restructuring announcements or transformation, we've been very focused on that. We see it as an important part of both the investor participation in our success and in the signaling around capital discipline for management in how we manage the company going forward. And so we think that getting to this point of now accruing for future distributions is a milestone in that transformation.